Hey guys, what's up? So, in this episode, we're basically going to be talking about what's going on with the current market and how we can profit off of it with little to no effort and little to no risk at all. But also, we're going to be drawing a bunch of trend lines, and I'm going to be talking about what's going on in the news and, uh, you know, just everything. So, let's pretty much get straight into it. So, right now, right now, we're going to also use statistical analysis using an algorithm that I wrote. So, as you can see right now, my profit factor is a little bit higher than what it usually is, which is 4.2 with a 63% accuracy rate. This is the short pause, so we're not going to do that. Let me just save that and go to my back testing. No, not back testing long. Coding long term. Okay, so now we have my long term stuff. Okay, let's turn both of these off. Okay, so on the day chart, long term wise, this is my algorithm I wrote right here. Moving averages are bullish. Volume is average. DMI has no trend currently right now. Ichimoku is weakly bearish. The RSI is growing in the bearish zone. The stock RSI is bullish. The MACD's bearish. The awesome oscillator is falling in the bearish zone, so it's turning into more bearish. Probability is growing in the bearish zone at 38%, which is basically around a 60% accuracy. So there's a 60% chance that it can continue to go down, but there's also a higher chance that it can go down. As soon as this number grows, you basically subtract it from 100, and then equilibrium is 50. Actually, shoot, sorry, it's around 70%. To be exact, 72%. That is that. Okay. So growing in the bearish zone, as you can see, we have the 100 and as you can see right here, we have the 200-day moving average and the 10 moving average, the 10 WMA and the 200-day SMA. And as you can see, this could have been a support. So in the past, if we're drawing lines here, so I can make it bigger, let's clear the chart of everything. Okay, so as you can see, let me just be able to draw here. We have a double top kind of right here form, but we don't really actually see it play out down here. So we don't really, that does not necessarily matter. But it does use the 180-day SMA as a support. So if we turn down this, we can see where it's at. So let's see where the support is at, where the maximum support is at. Okay, so it's looking around 170 on the moving average, that it's going to be used for maximum support. And since this is TQQ on the day chart, you can kind of see it. I have my face covering up, but also I think it's 120. Is it? Shoot, 120 is a great way to see it, because as you can see, there's consolidation, comes back, it gets support, and then goes up. Support, boom, and now we have support here. So what happens before? So as you can see, we get support here, support here, support here, support here. So there's a higher likely chance that the market's gonna continue to move up. But there's always a slight possibility that it can go down. And right now we're kind of at a breaking point. If it starts off next week, so Monday the 17th, below the moving average, and it's way below, like it's not touching anything. So that means that we could be seeing a downward trend, which means you might want to cover some of your stocks, cover profits, and start buying SQQ. Or if you already have profits that you want to keep, if you want to just keep a stock and you want to make a quick buck, you could buy 1/3 of your account with SQQ and watch it run up and then sell it when it's at the bottom for a little bit more profit, and you basically covered your losses, because SQQ is triple leveraged, so you only have to put 1/3 of the money in it that the market does. So if I were to buy QQQ, I would only have to buy 1/3 of the price in SQQ that you know everything. So we're going to talk about real quickly why the markets are going down as fast as they are. Okay, so there's a few reasons. Um, Actually, shoot, yeah, there are a few reasons, and the few reasons are basically new administration is in office, new rules, higher taxes, higher, especially like just in the news. It doesn't even matter about like, okay, interest rates went up, which is a Warren Buffett literally said it's a correlation with the stock market. If interest rates go down, the stock market goes up. If interest rates go up, the stock market goes down. It's basically how it is. But it really, really does not necessarily matter at any point in time, because as you can see, I mean, just look at past. I mean, even with a higher, what's it called? A higher, what's it called? Even with a higher, yeah, even with a higher interest rate, the stock market can still perform and go up. But it's everything added onto that. Considering that half the, what's it called? The East Coast's pipeline was hacked, and they're struggling on that. Workers are shut out of the job, and just overall, the market is doing a little bit worse than it was 9 months ago or even a year ago. Even though that this was kind of the start of the coronavirus time, as you can see right here, February, March, April. It is currently, shoot, yeah, so May of last year, the stock market was right here. We're starting to recover, but we're at pretty much a critical point, as you can see. But, it how it is, and it pretty much how it's going to be for a little bit of time. Because, why not? But you can also always cover yourself. So, if I draw a quick line right here. So, as you can see, the market could have a double top. A lot of people are saying that this is like the 2008 and 2007 double top, where it's massive that you can't unsee it, and especially that since it's confirmed and it kind of did a downtrend. As soon as it gets past this area, kind of right here, as soon as it gets past this area right here, so as soon as TQQ gets below $76, that's when we should be really start to worrying, because that is a big issue. If you know that it's a pretty darn big issue if it continues to go down. But that's when our worries are really starting to take an effect. Um, but there always is a possibility that it's going to go back up again. But it's how it's going to be currently. So I mean, that's how it is. Now we can talk about basically how we can profit off of this. So what are things that go down, and how you can cover your profits? What are stocks that go down, and how I would diversify my portfolio if I had an option to sell around this price? Because 76 is kind of a last breaking point where it's going to start to look like this. Even if it drops below this mark right here, I mean, it's somewhere just around here. So okay, so what are our options? Well, you can always buy SQQ, and as you can see, um, it may not look that sustainable because it's always on a downtrend. That's because it's basically inverse TQQ, which is the market, but we are really close to breaking here. And as you can see, what happened last time when we started break, it shot up a ton of percentage. So, let's check here. So that's 30%. And since we're leveraged, it really is incredible. So that's 33%. It's just how it is at the moment, okay? We can always buy SPXS. We can always buy this, which is the SPY leveraged shorting, and that pretty much always works. We can go into stocks that pretty much never go down. Um, well, you can just put it in foreign currencies, of course, and then gold. As you can see, gold's starting to go up again, and boom. So we have a few options that we can do and to cover our profits, and so that's kind of what I'm going to do. So I will be taking the necessary steps and put my plan in place. If it drops below 75, that's when I start heavily selling stocks because that could be a recession point. But if it isn't, that's great because then I don't have to sell any of my stocks. So this video is kind of for the long. It's kind of for long term and short term. If for short term gains, you can start shorting it. For long term gains, you can cover your profits and start shorting it, and at how it is. So, thank you for watching. If you learned something, please give it a like and subscribe. See you later.